I think it's the second best ever, but it's the best ever podcast. Just joking, just joking. And he's the author of the Amazon bestselling Raising Private Capital. Matt, welcome. You got the best
All
ever.
good, Dan.
Whatever.
All good. No, 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 man. You could be the best, but the best ever show is it's a fun fact. The best ever show is the longest running daily real estate podcast. It's been on the air for upwards of 10 years. And
All
I'm
right.
grateful to be one of their hosts. I'm not crazy enough to do a daily show. Joe Farrell has started it doing a daily podcast, and I'm just one of the 7 hosts that host that show. Grateful to be working with them, and I'm really grateful to be here with you, buddy.
Well, welcome, Matt. So, talk to us. So, before we get into how to raise capital for your next investment deal, tell us a little bit about Matt. What's your journey been like? Tell us, go back as far as you're comfortable or as far as it makes sense to go back.
Back when I was 2 years old, Dan. No, no. I kind of stumbled into raising money from other people, man. It pretty much was put in front of me as, hey, I've got money to put to work. Can you put this to work? And I was like, sure. What the heck, you know? This is a guy that my wife went to college with that had 50K that was just sitting there, and he wanted to put it into something, and so he gave it to us, and I went and put it into a couple of real estate deals that I had found. And before you knew it, he was happy and was making a good return on his money. And he told a bunch of his buddies about me. And then we were off to the races from there, man. And just started building a brand around it with YouTube videos and educational product on real estate investing and everything like that. So it, uh, it grew organically over time to the point now our company's raised about 72 million in investor equity since we've been raising capital, and we've been raising capital for upwards of like 14 years now. In that, so we're sitting at about 72 million in total investments, mostly multifamily apartment buildings. We also have a fund that does hard money loans and that kind of thing too. So we're blessed and grateful, man.
What's the name of your company?
DeRosa Group, DEROSA, DeRosaGroup.com.
All right. So tell me, Matt. So if I got an investment deal and I want to raise money for it, what do I do?
Well, first thing you got to realize, let's say that you're a real estate agent that you stumble across a sweetheart deal and you're like, like example, let's say you come into like a 5 unit apartment building, small multi-family thing. Seller's a little in distress. Maybe, God forbid, they're getting divorced or something like that. Or maybe it's an estate and the seller's not looking to get absolute top dollar. They just need to get it off their plate as soon as they can, right? Now, a real estate agent or a wholesaler, whatever, may like a wholesaler is going to wholesale because they think they don't have the money to do the deal. A real estate agent's going to, broker it so they can make a commission and feed their family with it, right? What if that wholesaler or that real estate agent could go reach into their handy dandy cell phone and with a few phone calls, like put together a few investors so that they could take that deal down and that real estate agent could make probably upwards of the same amount of money they'd make in a real estate commission once. What if they could make that every year in passive income? Right. Or the wholesaler and, whatever their wholesale fee would be, what if they could make that, annually in passive income over and over and over again, mailbox money checks coming into into their inbox. The way they do that is by realizing how much money we all have, Dan, sitting in our cell phones waiting for another home. And the fact of the matter beyond that is almost all people that park their money passively, except for the savvy, and I'll talk to you about how to deal with them. But aside from savvy investors, almost all people park their dollars that they want to grow on Wall Street. And there's nothing wrong with that. I'm not an anti-Wall Street guy. I'm just an options guy. People should have options on where to put their dollars. And if you know how to talk to people, they will love to know that their retirement account or their cash or whatever it may be is right down the block from where they live in that 5 unit apartment building that realtor or wholesaler found versus, a couple of hours away sitting in the hands of a mortgage broker or a stockbroker they don't even know. In that. So that's what this whole thing is all about, and knowing how to find that money that's right underneath our nose.
So walk us through this. So let's say I find let's say there's an estate sale and
Yep.
it's There's some heirs and they live out of state. They just want to get rid of it. It needs some
Yeah.
improvements, and there's a bit of equity in it. Well, what do
Yeah.
you do?
Yeah, and that could be a fix and flip, guys.
Sure.
That could be like I bought fix and flips off of estate sales. Again, it was a blessing to them because they got the big fat check in their pocket, and everything like that, and they were able to clear the estate and move forward. Or it could be a rental property, whatever it is. It's just got to be somebody who's willing to let something go at a way really like a great price. That's a win-win for the buyer and the seller, right? The way you go about it is. And you don't start looking for money when you got a deal. You look for money before you got a deal. And in my book, Raising Private Capital, the way I tell people to do this is to make your money list. And your money list has to have three different money sources. There are like the sources of money are three different things. And this sounds so obvious, Dan, but I'll break it down for you one by one. The money sources are first one, cash. Not like, greenbacks underneath your mattress. I'm talking about like just dollars sitting in your savings account, earning you a whopping 2.5%. That's number one. Number two is equity in real estate. That is the equity in your home and that. And the third one, which is this is like the magic one that nobody thinks about, and that's retirement accounts. Because people don't realize you can put a retirement account into real estate investments. It does not have to be on Wall Street. It can be on Main Street and that. So if you like, you and I can dissect each one of those. You want to do that?
Well, yeah, but I got a question specifically about the so if you're investing, yeah, walk me through that, right? So I think I like like to be like a self-directed IRA, for example,
Hmm.
I guess you'd have to have walk me through that because I've
Hmm.
done self-directed IRAs directly as the principal, but not as like the person raising the capital or as a limited partner investing
Yeah.
it. So just walk me through that if you could.
All right. We're gonna do hypothetical, right?
Yeah.
I'm Matt. I find the deal. You're my
Well, that's
uncle.
not hypothetical.
What's that? I really do
You
find the
you are
deal.
Matt. That's
I
not even
really am. I
hypothetical.
really am Matt. I could change my name to Jerry if you want. Just for this conversation, I could change my name if you'd like for me to. But let's say, I'm the deal finder, or in my book, I talk about the deal provider, right? So I find the opportunity. I am maybe the full-time real estate investor, or the agent, or the wholesaler, or whoever that's got their tentacles out there looking for opportunities, and I find an opportunity. And I reach out to my good buddy Dan here. And I happen to know that Dan used to work for, I'll make it up, like Conrail. He's an engineer at Conrail. And then he moved over to another company, right? What, you
It
laughing?
really is hypothetical making me an engineer, but go for it, man.
Did I just give you an upgrade?
I probably so, probably so.
So, okay. So he was an engineer. He's, well, let's make you an executive. You're a C-suite executive at Conrail, right? And then you got picked up by, M&M Mars or something like that. And so now you're over there. I know that you're a friend of mine that used to work at company A and now you work at company B. Listeners, think about that. Everybody knows somebody who used to work here and now they work there. What's great is my buddy, what I know is that the retirement account that my buddy Dan had when he worked at company A, when he was a C-suite executive running the show over at Conrail, or even an engineer, or doesn't matter what he was doing, making coffee at Conrail, doesn't matter that whatever his job was there, he had a retirement account and he moved over to another company. And that retirement account, 401k that he had at Conrail, is now automatically an IRA because it's not a 401k anymore. Automatically gets converted to an IRA. I know that I can get Dan through about a 2 week process to roll over that IRA to what you've already talked about, Dan, a self-directed IRA. So what I'm going to do is I'm going to go to you and I'm going to say, hey, Dan, I know you got that IRA account, when you used to be with Conrail. How much, do you mind asking how much is in it? Well, last time I looked, I don't look at, nobody looks at the IRAs, by the way, Dan. Nobody looks to see how much is in there,
Yeah.
watches, they kind of forget about it, right? So you're like, how Matt, now last time I looked, there was 250K sitting there. Well, I can't touch it till I'm 65, right? Yes and no, Dan. You can take that money and roll it to an IRA custodian, and I can help you grow that money much faster than it will on Wall Street by investing in this deal, this estate sale that I got. And you, Dan, either step in as a lender, as a bank on the deal, and I structure this whole thing with a promissory note, loan agreement, everything like that, and you become my bank for that fix and flip deal, or you and I become JV partners. Doesn't matter, you know? Meaning JV partner means like if I buy the property and God willing, and the creek don't rise, I make like 75K doing the fix and flip. Great. I cut your IRA in for a portion of that profit and I keep a portion of that profit. You want to be a lender? You want a little more security? Great. I can give you first position. I can give an IRA collateral. Like it's a bank. I can put it as a lien on the real estate, just like you would a bank, Wells Fargo, whatever, is going to put a mortgage on the property. Well, I can give you your IRA account a mortgage on the property. And I got to make you a monthly payment, whatever it is you want, back to your IRA. And when I sell the property, I give you your principal back and it's protected with a lien on the property. There you go. That's how you structure it with an IRA, with cash, whatever it may be. But I've got to lead you. I got to lead the horse to water and show you how it goes and structure all these things for you and take you to the IRA custodian because a lot of times investors don't know that these things even exist. And so that in essence, Dan, is how you would set it up. Yes, you can take your IRA and invest it yourself in deals, but I can also find people in my network that have these access to these resources to put into my deals too.
Any challenges with the self-directed IRA? Because I know, like, if you'd have to get a non-recourse loan. So then, if you're doing that, like in a JV or as an investor, like
Yep.
that's the piece there that I'm not clicking on that piece there.
Got it. So you're right, and you're right. You're wrong, but no, I'm kidding.
I know I'm right, and I know I'm wrong. Especially, I know I'm wrong,
Yeah.
right? But that's where I'm like trying to figure this out. Walk me through
There's
that.
there's one lane of traffic that you can do this thing in. Let's say that like Dan's got his IRA and Dan wants to then go and invest that IRA into his own rental property or his own fix and flip. You can do that. You can take your IRA, Dan, and buy bars of gold with it. You can take your IRA and invest it in private placements. We do that too. You can take your IRA and invest it in all kinds of things. And you can invest it in your own fix and flip. If the IRA is taking title, if it's owning the real estate directly, you are correct. You cannot have a recourse loan. Recourse means that God forbid you don't make your mortgage payments. The bank can come and look like they would for me. If I stop making my mortgage payments on my home, they could come and take the house, and they could also sue me personally, right? That's called recourse. That means I'm responsible, right? The law says that an IRA cannot be held accountable, cannot be exercised on recourse. I can't come and take somebody's retirement account if they don't make their payments on a house or whatever it may be, right? Now. That's if you're taking title direct as an owner with the IRA. But your IRA can invest in my deal and I'm on title. I'm the owner, right?
So,
I'm
so lender
either
of it. Got it. Yeah.
yeah, the
Yeah.
IRA, it does not matter if if it's recourse or not. It doesn't matter. And if your IRA becomes the bank, then it's the bank. You take your
Yeah.
200 grand IRA and it's loaning me 200 grand to buy the property, fix it up, and off we go. So there's no recourse requirement if you're an investor. If you're a passive investor in somebody else's deal, the recourse rule does not kick in.
Okay, so they could like say loan you 100 and you go take a loan for 300 or whatever.
Yeah.
That 300's you or your company is signing for that. So that's got nothing to do with the person that's giving you the whatever portion of the investment from their
You
self-directed
got it.
IRA.
That's it.
Got it. All right. Thanks for letting me
You are
understand.
welcome,
Help me
sir.
understand
I
that.
want to
All right.
touch on one. I want to touch on one thing. I said real estate, right? People are like real estate. Yeah, it's hard to get the capital out of real estate. But guess what, Dan? You know what percentage of America, last time I looked, owns their home free and clear?
I would say
All
a
them
bit.
baby
Yeah.
boomers out there and all
Yeah.
that. 30%, dude.
Yeah.
30% of America owns their home free and clear, right? Realtors may have encountered people that go to sell their home and like, oh, hey, wait a minute, title company needs your mortgage payoff. There is no mortgage payoff. The houses I own, I paid this house off. Most people that own their home free and clear brag about it, because it's a feat to pay your house off free and clear. That's the thing, right? So what's great is, yes, you've relieved yourself of one of the major burdens, which is debt service, and having to pay that overhead for your household every month. what you've also done is unlocked enormous potential. And you can go and take that free and clear real estate or just real estate with some equity in it. Like my home is not free and clear because I have really cheap debt. So why would I go paying that off? And the home I'm living in now, I have a HELOC on it, a home equity line of credit, right? I take that HELOC and I put it into hard money deals. I'm about to close on a fix and flip in 2 weeks using the home equity line of credit I have on my home. A lot of America could take the equity they have in their house, go get themselves a home equity line of credit and invest it in short-term bridge loans. They could invest it in their own fix and flip deals, or they could give it to active operators like you and me and make even more cash flow with their to unlock that equity that's just sitting there. It's the biggest piggy bank America's got, and unlock it and put it to work into deals.
Yeah, particularly with the appreciation over the last several years, that if you bought something 5 years ago, you got,
Heck
see,
yeah, man.
yeah, you got equity. And so so there's a lot of a lot of my past clients. I've been, helping as a real estate broker since 2007. So I've got past clients that go way back that have tons of equity
Yeah.
in their real estate. And so that's an opportunity there. And then you said cash as well, which is not as I guess it's probably harder to save $100,000 cash than it is to get $100,000 of appreciation through real estate. But
Yes and no,
nonetheless, some
man.
people have a bit of cash.
Some people live like, and I admire them, but some people live so far below their means, it's crazy, man. Like this is the person that's got the same car the last 15 years. They got a bunch of promotions at work and never moved. They're not like living at or God forbid above their means. They're living way below their means. And they're putting their money in things like CDs or savings accounts, or yeah, Wall Street too, whatever it may be. This is like there's a book. It was written a long time ago, Dan, so some of the principles are a bit dated. But it's called The Millionaire Next Door, and that is under the premise that a
Eckert or
lot of
something.
like,
Is that right?
what's that?
Who's the author of that? Who's the author of that?
I don't know. Guy that wrote The
Yeah,
Millionaire Next Door. Let's ask Google. Uh,
got that book somewhere around here.
yeah.
That's an old school book.
Yeah.
Are you
Next,
Googling it right now?
I bet you better believe it. It's a great book, man. It's worth it just for your show to promote it. Shit, come on, man.
I can juggle right now.
Thomas Stanley.
Thomas Stanley. All right, old
Thomas
Tom
Stanley
Stanley.
and William Danko, both PhDs, thank you. That means they must be smarter than you and
Hey,
me, man.
that's
Yeah.
right.
Yeah.
All right,
I
well,
can't
what's old
when I have a
Tom?
question I don't know the answer to, Dan, I gotta get it. I'm like, all the answers
I
in the
got
world
you.
are at our fingertips. I gotta Google it. So yeah.
Yeah, I'm the same way. I'm the same way. All right, so what are the doctors? What do they say to us?
The good docs, Dan, are telling us that if you and I are sitting at a stoplight and on the left, I got a Lamborghini. Then on the right, I got a Ford F-150. The statistics say that the driver of that Ford F-150 has a higher probability of being a millionaire than the
Yeah,
Lamborghini does. The Lamborghini is probably what they call broke at another level. You know, like they're probably living with an expense line at 40 grand a month, 30 grand a month, whatever it may be. Maybe they got a great job, but they're spending every nickel that they're making. So the book in essence says that millionaires in America tend to be in disguise. And that's what I talk about in the book, Raising Private Capital, is how to find in your own network, listener, not going to millionaire.com and trying to find an investor to invest in your deal. Go to your own cell phone and think of the person that I said earlier that used to have a job working at company A and went to company B, or that has had a bunch of promotions and doesn't go on fancy pants vacations, or hasn't moved in the last 15 years, or as Dan said, was smart and got good debt on their home in like 2017, 18, and the market blew out and they were smart and didn't refi up. They've got lots of equity, whatever it may be. These people could be millionaires next door, and they could have money sitting in CDs or money sitting in the stock market and just aren't sure how to get to their wealth goals. And you can help them get there by helping them put it to work in opportunities you come across.
a little bit. So, all right, let me sum all this up, Matt. Make sure I got this. So you've got you use the word, and I'm gonna have to translate this. I think you used it before we were talking. You used the word Rolodex, and I knew if you used that on the show, I'd have to be like, I am ashamed that I know what the hell a Rolodex is, right? But
I
hey,
am
all
too,
right,
man. I
just
am
no, here's
too. I'm
what I'm not gonna
embarrassed.
tell the audience what the Rolodex is. You got to
Anybody
Google it.
under the age of 45 listening to this show is like, what is it? Rolodex? Is that a website I could go to Rolodex.com? Is that where the rich
Yes,
people
go to
are? Is on Rolodex.com?
Rolodex.com. All
Oh
right, so
God. I remember having
you got
what?
people in your database that
Yes.
are you got
I
people
gotta
in your
stop saying
database.
Rolodex. I still use that term just because it
I
just
know you
means
said
that.
it
It
to me
means your
before the
database.
show.
Yeah. But old guys like you and I know what the hell that is. Like, oh, a
Yeah.
Rolodex. I got that. Yeah, 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 yeah.
All
Anyway,
right. So
people you know.
you got people in your database, people you know who
Yeah.
for that either they're frugal and they've saved money throughout the years, or they have equity in their homes, or they have a self-directed IRA. And then you've got your own, potentially cash, potentially equity, and
Yeah.
potentially, your own IRA to be able to, have some of your own resources, but then reaching out to those, those that and you would be surprised because the guy driving that F-150 is more likely to, to be that millionaire. I do remember reading that book years ago, and I remember that concept. So thank you for reminding me.
What's
And
funny, Dan,
so,
is in the book they say the most common. I didn't just pick Ford F-150 out of a hat.
yeah, I know.
The most commonly driven vehicle at the time of that book was written, the most commonly driven vehicle of millionaires is the Ford F-150.
Yeah, you know what's funny is that
It's
hold
not a
on, hold on.
Porsche. It's not a
I got to
Mercedes.
tell myself. I got to tell
Not a
myself.
Beamer. Yeah, there you
When
go.
I read the book, guess what, Matt? I drove a Ford F-150 and I was not a millionaire. So
You're in the statistical outlier, right?
yeah. So, all right, Matt, thank you for sharing this all with me. If you were to leave our audience with like one nugget of something that you would say that you've learned through your journey, and you have an extensive, expansive journey, what would that be?
Take your blinders off, guys. The realtor, the investor, the whoever you are listening, you might make a few bucks selling great deals or looking for great opportunities. But for good and I get you got to feed your family on that money, on that real estate commission, whatever it is you're doing, and that. But think outside the box a little bit and realize that with a little bit of creativity, you might be able to create win-win scenarios. And I'm not saying you stop being in any of these, good like professions in America, like a real estate agent or a wholesaler, whatever it is. But what if you sold a deal, bought a deal, sold a deal, sold a deal, bought a deal by taking your blinders off and seeing that the folks in your network, right, are looking for a better way too, right? Maybe they're looking for another way to raise their own wealth or to feed their own family or to reach their own wealth goals, right? Whatever it is, understand that there's a lot of people out there that are looking for the same thing that you are, which is a little bit more of a leg up. They want to climb the ladder just a little bit faster. Maybe not sprint to the top. They don't need to be Jeff Bezos. Maybe they just want to get there just a little bit faster. And you can help them get there if you take your blinders off and look at all kinds of different ways to get things done.
How can someone get in touch with you, Matt?
They can go to derosagroup.com, DEROSA, derosagroup.com. My book is called Raising Private Capital. Exactly those names. It's a book very similar to that name. That's not my book. Raising Private Capital is the name of my book. You can pick that up on Amazon, or you can go to derosagroup.com and you can connect with our company.
Thank you for your time today. Audience, thank you for your time today. Have the best day of your life. Be grateful, make good choices, go help somebody, and God bless you. See you guys.